Hey guys, in this video I want to talk about long gold against the Australian dollar. So you can see that it's been in a long-term uptrend since 2006. It's really kind of breaking out recently, and I do have my gold against the Hong Kong dollar position already. But essentially by doing this and entering along this trade, now I've sort of got the hedge against my Australian dollar and also a way to diversify against the US dollar becoming too strong and affecting my gold trade. Fundamentally, it looks like the Australian dollar is going to be headed downwards. And the time frame of this trade would be around a year or so. System-wise, I'm in need of more risk in my portfolio. So really what I'm looking at right now in terms of portfolio risk is I've got only utilizing about 31% of my gains portfolio and only utilizing about 5% of my total portfolio. You can see that I do have a little bit of this is actually short the Australian dollar. So that's a little bit of a position, but there's not a lot of short Australian dollar exposure that I've got on right now. So that's system-wise, portfolio-wise, it does seem like it's a good idea to enter the trade. And then technically, this does look like it's breaking up. It's gathering quite a lot of momentum. In fact, to the point where you'd probably be looking at this coming down for a bit. I wouldn't be surprised if that was the case. This is the weekly chart, daily chart. Now, intermarket wise, it does look like stocks do want to break higher. Fundamentally, there's potentially easier monetary policy ahead, which would be bullish for gold. Having said that, the sentiment towards gold does seem to be getting a bit more bullish with Port Tudor Jones, Ray Dalio talking about being long gold, and also articles on gold appearing on Bloomberg. So, well, I think there's a 30% chance that we will see this actually hit 2,500. So that's a big call. 20% chance that it goes 2,200 around here. And then 30% chance that it'll go to 1,900 down here. And then a 20% chance that it'll go to 1,750. So not a huge high conviction trade, it's more trying to follow the trend. And if the price does continue to move upwards and look at that kind of breakout pattern forming, and if it breaks above that, that certainly would be a bullish sign. If the price does continue to move up, I'll continue to add to the move. If the price does come down, then I would probably just hold it, since this is really just a base position where I would only be holding one leg of this trade. Psychology wise, I am a little bit tired, just due to the fact that I've been staring at a screen all day at work. It's particularly tiring on the eyes. So last thing I want to do is come back home and stare at a screen, which is kind of what I'm doing right now. But that is the gist of a trade. I would be looking to enter about the level that it is now, with a stop loss around here, 1750. Yeah, so we'll see how it goes. Thanks for listening.